let's talk about the ease of movement, a volume-based indicator that combines in its calculation and compares the price movement to the volume behind the price movement. The result we get shows us, does the market move freely in a trend, healthy market conditions without any specific need to push beyond that, or does the market have some difficulties? So let's break it down. Step 1, where do we find this indicator? So we go to the indicator section, volume, and the second one from the top is of movement that will compare the averages of the last 14 bars by default, makes the price movement behind these bars and the volume behind these bars, and give us the outputs. You can define the line style and thickness, as well as predefine the visibility, what time frames and chart types you would like. And I personally like to add the level 0, even though not necessarily not mandatory. I just visually like to see when the price is getting way above the 0 and where it is below the 0, to show increasing flow of buyers and sellers in a free, healthy market condition, and when it is around the 0, which means the market has some difficulties despite higher volume. Okay, so here are the conditions, and that's how you actually can know when the trend conditions are healthy or not. You can see, for example, when the market is making its own higher highs, higher lows, and the buyers manage to maintain its positive values, right? Increase the values above the 0, it is a strong indication that the flow happens easily without the need of pushing very big volumes. The market just goes and flows. When the numbers are going negative and get far from the 0, like happens to be here, for example, the sellers usually are the one who are in control. When we have the sequence of lower highs, lower lows, and it is going below the 0 and holds below the 0, it is a strong a bearish market condition and a great indication that the sell is the right direction. But also pay attention to the scenarios where it's getting very far above the 0 or below the 0, and then it goes very close to the 0 once again. For example, it made a low, right, a complete low compared to all the other lows around, and then slowly start to shrink. That means we are entering here the conditions where the market starts to lose its momentum, and that means for us that the volumes are there, they are trying, but the market is moving with difficulty, not freely. Okay, and that these are the exact situations you would want to avoid. And when the market basically goes flat around the 0 without the ability to make something like that, without the ability to make any highs and low sequences, like in that case here, look what happens here. It's right on the 0, and the market fails to make any increased or decreased values above or below the 0 to gain to show the healthier flow, money flow, in healthier condition. That usually represents ranges, consolidations, and market phases that you would better avoid. Want to learn more indicators? Want to learn more trading tricks? Make sure you follow this channel.